Welcome to the latest episode of Wealth Uncensored. We're joined by my friend and colleague, Stephen Pokoly from Shasti. Why don't you give us a little bit of background? I know we've had you on the show before. So for those new listeners, why don't you give us a little bit about your background, your experience here in Dubai, how long you've been here, what you guys do?
Perfect. Thanks for having me back. As you said, I've been here for a little while. I think just about 1 year more than you. So I've been here 11 years here in Dubai, and I'm the co-founder of Shasti. We're a full-fledged real estate brokerage doing long-term leasing, buying and selling, property management, and even short-term as well. So whatever your real estate needs, we got you covered.
Yep. I mean, we've worked together with some mutual clients and some friends of mine, and you guys have done a great job. I've gotten positive feedback.
I'm a guest here, so something must be right.
I can definitely vouch for you. I've seen the results, experienced them firsthand. Look, I think today I want to offer our guests, because this is a question. I'm not in the real estate business, but obviously sometimes I help clients do the tax planning and stuff around that, about moving to Dubai, or some of them are interested in investing in real estate in Dubai, and then they want to know how to best structure that from a tax standpoint. Then they also need the real estate aspect of that, which is when I send them over to you. But a lot of times in the interim, they ask me, what are your tips when investing in Dubai? What should I look out for? I say, you need to talk to Stephen. I think a lot of people have these questions, so why don't you enlighten us?
No, that's probably one of the most common things that we get.
Welcome to the Wealth Uncensored podcast, straight talk about everything that impacts your wealth. In each episode, I share what I've learned through my own experience and 2 decades of helping high net worth clients structure their affairs to minimize taxes and protect their assets for the next generation. I'll also feature special guests who are experts in their own field, sharing their knowledge and experience to help you protect what's yours. I'm your host, Jimmy Sexton. Let's dive into today's show.
Over at Shasti. So basically, we put together the top 5 tips to avoid disaster.
Okay.
It's really important to really think through the investment. It's an exciting place, but it requires a smart strategy. This is something that we take time and really make bespoke strategies based on our clients' needs. Some of these are just the learnings throughout the years of experience, and then also dealing with our international clients.
I know a very good friend of mine, client of yours, that you guys, a couple of people that I know very well, you've spent a lot of time with, educating them on location, different builders and all that kind of stuff. And I think that's something that's really important, because not to name names or bash anybody, but Dubai is one of those markets, unfortunately, where I think a lot of markets are like this. You have very few people that are actually very good at their job, especially I think in the real estate business. I've had experiences here where realtors, like, they don't show up, tell you whatever they think that, oh, this is the best building on the planet in the best area of town. They just want a commission, and they don't really have the ethics that they should have behind it. I think you guys definitely do. So let's use these tips.
That's amazing.
Tips to keep people out of trouble.
That's a good segue, because actually that was number 5, but we'll move it to number 1.
All right.
Choosing the right agents or agency. This is super important. Obviously, you want to work with someone who's transparent, obviously focus on the investments, and looking for long-term relationships, not really bullshitting with sales pitches or fly-by-night type developers or things like that. So basically, my suggestion is try to connect with a few different agencies or agents, find the one that works best for you, and then go from there. That's the foundation and starting point.
I think the one thing that, you always say is you've always explained it to me that you guys have the advisory side of the business, then the brokerage side, and then the management side. And I think that advisory component is super important, because I don't know how many agents there are or brokerages there are, but there's too many. There's a lot. I feel like a lot of them don't even really understand the market, like what's coming online, what factors can impact it. They're like, oh, there's a new building popping up over there, offering good commissions. Let's go sell that.
Exactly. That's what I want to say. There's a lot of variables in getting pulled. Actually, we talk about what the commissions are with our clients while we're guiding them, so they can see how we're incentivized and where we could be possibly pulled, because they need to know these things.
For sure.
And it's really interesting, because we've dealt with international clients and some longtime residents, and they're always surprised about how forthright and transparent we are about those things.
No, even beyond the transparency is fantastic, and I know people appreciate that. But even beyond that, just the in-depth knowledge that you guys have over the market itself. Because I feel like a lot of people, they don't even really care. They're just like, it's booming. Let's just sell whatever we can sell.
It's funny you say that because there's certain days in the office that we feel like we're being overly scientific.
Yep.
And too academic about things. And then we have to tone it back and be like, all right, let's get out there. And, where the rubber hits the road, we have to actually sell things.
I know I certainly appreciate your guys' in-depth knowledge because I think a lot of people don't get to the table. Okay, so that was tip number 5. That's now tip number 1. So what's our next tip?
Doing due diligence. You have to make sure that you put in the time either on yourself, by yourself, or with your agents. But if you're going to go off plan or new construction, we had a nice episode a few weeks ago about that. But know the developer. What's their track record? Do they have a proven track record? Are they delivering on time? What is the quality and things like that? Not all developers are made equally. So there's that. And then also you need to choose if you're going to go that route or secondary. So you need to understand what your financing is and choose what makes most sense for your investment needs. But just to summarize that point, though, it's just do the due diligence. Be ready to spend time. Don't take things at face value. Scratch the surface.
And I think one of the things that's also really important about this when you talk about the builders, because it does, the builders here make a big difference in terms of quality. But I think what's also important is understanding, how the management of these buildings works long term, because some management companies, they fix things properly, they maintain things properly, they make sure the rules are adhered to. And then you have other ones that just let the buildings get run down and you see them a few years later.
Yeah, for sure.
So I think that's super important as well.
It's really interesting. And I'm surprised it's not a bigger selling point by some of the developers that when they are fabricating them, producing them, whatever, building them, they're not advertising that they will be managing them after, because some of them do that, like EMAR or Marquise or whoever, certain developers are managing the properties after, while other ones, they outsource it. So for me, there's no better kind of sign or guarantee that the quality mark is going to be there if they're willing to actually manage what they build after.
No, for sure. That's a very good point. I've never seen that marketed, and I think that does make a huge difference. Okay, so that was tip number 2. So on to tip number 3.
The most important, I think, for me personally, is location. I'm one who really spends a lot of time thinking about, okay, is this the kind of neighborhood that I want it to be in? Think about profitability. Is this a mature neighborhood and there's going to be capital appreciation? Or is it going to be more a safe bet? And I'm okay with that because I'm more of a long-term investor. So again, this is something that we discuss with our clients. It all depends on the investment strategy, but location is super important. It's really, I don't know if all the listeners are really aware of how big Dubai is. So for example, I live in Marina, you live in downtown. There's about 15, 20 kilometers. So whatever, 13 miles in between us. That's twin cities in some countries. The neighborhoods are really diverse. There's waterfronts, there's inland, there's urban, there's villa communities, so much like any thriving metropolis. But really know your stuff and make sure that you're choosing the right location based on your investment strategy.
I think that's great, not just with the strategy, but as you were saying, like certain areas you're going to have a lot more tourists too, which some people don't necessarily want. Traffic is always a big thing here.
It's getting more and more. For sure.
I had a lunch in the marina on Saturday, and I told my friend, I was like, man, are you sure you want to do marina? They're like, no, it's going to be fine. Yeah. It's like I needed like an hour to get there. Yeah. I think a lot of these things people need to really think about as well. What's it going to look like on the weekends? How's the traffic going to be in the evenings? What types of people are going to be there? Do we have the right kinds of the restaurants that we like around? Yeah. Have easy access to, we get everything delivered here. So we have easy access to good grocery delivery, to dry cleaning, all this kind of stuff. Is all super important when choosing location.
I got a pro tip, actually.
Okay.
Dubai 2040 plan.
Okay.
Take a look, see where the government's spending money, where the development's going to happen. They have earmarked 5 urban centers, I think is the right term. But that's a very simple and easy way to protect your investment.
Okay, I'm going to definitely check that out. All right, and I think then we're on to tip number 4.
Really important as well. Overestimating, maybe underestimating. That's the best case scenario, but overestimating yields, especially if if it's an investment property and you're renting. Think about also any hidden costs as well for the purchase and things like that. But be realistic on what you're going to get. And very simple though, what happens is that people take the purchase price and then the yearly rental. and convert it. Oh, that's a 7% yield.
Yeah.
That is correct. There's building service charge fees that need to be incorporated, right?
Insurance,
repairs and things like that. So this is, I would say, one of probably the biggest missteps people have on the market. That being said, if you compare it to other cities, when you hear 7%, even when it's a very high level estimation on the ROI, it's pretty attractive.
I was like, it's funny you say this because one of my brothers wanted to go in on a condo investment in Las Vegas. He goes, it's a great investment.
Yeah.
It's going to be this, and we can get financing for this. And I'm like, what are the association dues?
Yeah.
He's like this. I'm like, what's the insurance? He's like this. I was like,
Net
dude,
zero.
our ROI is like -4. Like,
Yeah, exactly.
Not a good deal. But those hidden costs or costs that you don't think about are definitely.
No, this is super important. And then also it links back to the location as well. In a more premium, mature neighborhood, you're going to get a higher rent, which can maybe offset some of that. But the capital appreciation would be missing because it's already at that mature level. But I can't emphasize enough how this overestimation of yields is like really one of the most common mistakes.
And then our fifth and final tip.
Yeah, no, that was the agent. We started with the agent. But I have an honorable mention. So especially if you buy off-plan, so new construction, the payment terms. So on our last episode, I gave a very simple one, 50-50. But they have, so it's actually, you go in, it's like you get a menu. Literally, I went in, there was like 9 different options. It gets pretty confusing. Once you're in the industry, if you're living and breathing it, it makes sense. But if you're a first time, second time, even a fifth time buyer, it gets a bit confusing.
You can finally use that algebra you didn't use.
Yeah, no, exactly. But I have to say, there's some real exciting ones. Some developers are offering a return on investment from the get-go of an off-plan property. So you invest let's say the property is 2 million dirhams, whatever, about $600,000. You pay everything up front and they will offer you a 8% return paid monthly over the course of 3 years. A different option. I know another developer, they have a 60-40 payment plan, 60% spread out over the first 2 years, all going into escrow, feeling very safe and secure. And then on handover, so when you get the keys and access cards and things like this, you have to pay the 40%. You pay everything then, and that's when the ROI starts. Then you get guaranteed 8% return quarterly for the next 3 years. So it's really interesting what kind of payment plans are out there. And I think Dubai is like a thriving real estate market, and I don't think there's a better place in the world right now to invest. And because of that, the developers are trying to outdo each other. I was joking about amenities earlier, and then also about these payment plans. So it's something really to look out for. So it's an honorable mention for sure.
I think that's good. I think whenever you have such a competitive market, it winds up being good for the consumer. The investor in this case. All right. So just to recap. So the things that we want to watch out for is working with the wrong people.
Correct.
Not doing the proper due diligence, ignoring location fundamentals, misunderstanding payment structures, and overestimating your rental yields, which actually profit are going to be. I think those are all very valuable tips, Stephen. So if people wanted to get together with you and get some advice, maybe look at some properties, how would they go about doing that?
I'm happy to talk more in depth about any of those things. They can reach me by email. So it's Stephen with a PH, STEPHEN at shosty.com, SHOSTY. Or you can head over to our website. It's SHOSTY, but it's .co. So .co. So this is something to watch out for. But my team and I, very happy to connect and make these bespoke investment strategies.
Great. Thanks for joining us again, Stephen.
Thanks very much.
Thank you for joining me on Wealth Uncensored, where we help you minimize taxes and protect your wealth for the next generation. If you like our show, be sure to subscribe and leave a review. And if you have any questions or suggestions for future episodes, we'd love to hear from you. You can email us at info@esquiregroup.com. And don't forget to visit Esquire Group's website for more information on how we can help you secure your wealth. I'll be dropping knowledge again next week. Don't forget to join us.